All right, welcome back to the show. My name is Michel. It's pretty early here. I still got the pillow marks on my face, but I'm joined by Patrick as always. And also, we have a special guest today. It's Michael. And Michael is an expert in precious metals. He has been a longtime entrepreneur, asset manager. And today we're going to discuss his perspective on what's going on around ETFs. What could the outcome be? Would it be positive? Would it be negative in the long run? How much money could we potentially see pouring into the industry? It's going to be a nice, healthy debate. So please subscribe to the channel, like the video, and let's go ahead and get started. Michael, why don't you give us a quick introduction about yourself?
I'm Canadian. I live outside of Canada most of my life. My background is asset management. I built a very successful asset management company that we sold in 2001 before 9/11, and at that time retired. So it's been about 23 years now, and I'm still very much involved in the money business, old clients, friend, and I manage our family wealth. That's what I do on a daily basis. I'm not a day trader by any means. I'm a value trader, and I don't trade every day. It's just that it's something I enjoy reading and researching and all that good stuff, especially about financial history. Previous bear market, previous bull market, and the resemblance between them all and all that good stuff has served me very, very well over the year. That knowledge, I think, is very powerful, and so that's what I do.
It's interesting that you study history because I always hear that history doesn't necessarily repeat, but it tends to rhyme. What is your take on that quote?
It does. I mean, in an incredible way. I'm 60 years old. I've been in the money business for over 30 years, and still yet that's not enough. 30-year experience, I think it's little. When you look at the financial market worldwide, we can go back to the Tulip Mania. There's, the Great Depression. It does rhyme all the time. The signs are the same, very similar. The worst thing you can do in finance, managing money is it's different this time. That's a very dangerous statement. It could be for a day or two, that sort of thing. But those trends are very powerful. I mean, if I have to keep it short, I buy undervalue asset and I sell overvalue asset. I don't care what it is. I'm not in love with anything, although my background is precious metal. It's a space that I understand very, very well. But like right now, for example, I'm one of those that firmly believe that gold is going to go back down, to the $1,750, $1,800 mark. And yet, most people are thinking that it's taking off. It's going to go, to $3,000, $4,000, $5,000. It will get there eventually, but we're not ready to go there yet.
Great. And Patrick, so I'd like to kind of learn a little bit about how both of you got connected.
We're I knew his son, and we got involved in some early stage crypto project several years back. But the thing I was more interested in is expertise in asset management. So I'm part of a Telegram group with Michel to learn from his expertise in the traditional markets, which is an area that I'm not super strong on.
So, Michael, being that you're coming from the traditional world, you're an expert in precious metal. Well, I mean, what's your take? What's happening from a digital perspective with Bitcoin and some of these other cryptocurrencies that are currently out in the market?
Well, I don't know if it's the age or not, but I'm not a big fan, to be honest with you. So I did, touch it a little bit with Patrick and some others, but in a very timid kind of way and with some pocket change, to be honest with you. And there's some room for everything, I think, to perform at one point or another, to do good, to do bad, that sort of thing. But moving forward, it is not. If I look at my portfolio, I have zero exposure. So that's basically what it is.
And what's your reason behind it? Is it just you don't feel like there's utility like there is with metals? So that tends to be a very common argument, that with metals, there's a lot of things you could do with it, right? You can use it, I guess, in the traditional world. Before you had cryptocurrency, or I should say any currency, you had a traditional barter system, right? Or you need metals for weaponry or jewelry, whatever the case may be. There's things that you can create that are physical goods. Is that your argument towards why cryptocurrency can't necessarily sustain itself?
Well, of course, if we talk about palladium, for example, in catalytic converter, and yes, there's this commercial value as a commodity and whatnot, and for sure. But if we focus specifically on gold, then we got to think and talk about the role of gold as money, and it's got a very long track record, including silver as well, but gold specifically. So when I look at crypto, I think the lack of intrinsic value is a big issue for me. I mean, the technology is there; it's been around for a while, and there's always going to be improvement on it. I think the blockchain, and it's being used already in several other sector, which is great. I think technology needs to keep moving forward, and it will. I mean, there's no issue there. But when I think about, where do I want to park my money for safekeeping, for peace of mind, gold is something that I'm attracted to because of its track record. When I look at Bitcoin, for example, and someone, in a friendly way asked me, what kind of price can you put on it? Well, electricity, the cost of making it, right? Like whatever that is, I don't know if it's $1,000 or $5,000 or $50. The cost of creating one Bitcoin, that's what it is. I mean, that's the intrinsic value is its cost of production. I think gold has a little bit of a different side or angle to preserving wealth, to giving you that peace of mind that it'll be there. I don't know about Bitcoin. I mean, I know what it is. I've looked at the whole aspect of it. But moving forward with the challenge that I think we are facing over the next several years, for me, Bitcoin is not the solution. I'm just being honest. I feel a lot more comfortable, with the goal that I have.
And over the last few days, as rumors started to trickle in about the approval of the Bitcoin ETF, has your opinions changed at all, or do you still stand by your opinions?
I do. I mean, there's a couple issues, I think, when I look at the ETF. I mean, if we go back, the first ETF was introduced in 1993 or so. If we look at the GLD, the Spider Gold Share ETF, we go back to 2004. I was very much there at the time. It was kind of a fun time to be in. It was very innovative and that sort of thing. And by the end of 2004, I think we had about, 150 ETF. Today we have over 11,000 ETF, active ETFs. So, ETFs are not new anymore. They've displaced the mutual fund kind of space. And you have an ETF for pretty much everything today. I mean, sector, a set of companies, commodities, it's just amazing. It's a very powerful and easy way to invest. I love ETF because most of them are very liquid, and all the good stuff. But if we look back over the last 15 years or so, maybe even a little bit more, from an historical perspective, you'll notice that, and it's funny to say this, but when a new ETF is launched in a specific sector, and I can think right now of marijuana, pot, for example, there's a lot of excitement around it. I mean, everybody's talking about it and the fear of missing out, the FMO and all that. I mean, let's get into it. But they tend to happen at tops. They're not, the ETFs today, you're not going to start an ETF that's boring, that nobody wants to hear about. So when are you going to do it? When everybody's excited about a sector, when everybody's excited about a specific space, and that tend to not create, but happen at a top. So am I saying that the Bitcoin ETFs are going to be the same? I don't know. I mean, obviously, I can't tell you that, but historically, that's what happened. Again, you can go back in the last 10, 15, 20 years, and you'll notice that most ETF that are launched in a sector or space that's, buzzing, that there's a lot of buzz around it. There's a lot of excitement. And from the moment it comes out, well, there's not much excitement anymore, and it tend to give us a top, if not temporary, permanently. And I think if you look at the marijuana sector, there was a lot of excitement about that. And now the other thing also is I've been reading a lot, and I see a lot of people, telling others that the reason why these Bitcoin ETFs are coming out and whatnot is that those asset manager, those sponsors are very excited about Bitcoin. They're very excited about the commodity or the asset itself. And that couldn't be further from the truth. I mean, that has nothing to do with that. As an asset manager, I mean, I was very specific on precious metal, but if you ask me today, would I start an ETF? My only concern would be an exciting space where I can make commission, the fees. That's what I'm after as an asset manager. I'm not in love at all, with the asset itself in the ETF or the basket of asset or commodity, whatever that might be. It's the fees. And they're competing against each other right now, of course, trying to reduce the fee as much as possible to entice as many people, because that's where the money is. The more asset you have under management, the more fee you make. So those two things are not telling me where the Bitcoin ETFs are going to go, obviously. But historically, they give me a hint, right? And so that's one of the reasons I would not be buying it. I mean, there's going to be strong competition if they come out, and they're going to be fighting over the fees, not the love of the Bitcoin itself. They couldn't care less. In fact, I think there was some asset managers just a few months ago, they hated Bitcoin, and now they're in love with it. What changed?
Yeah, I mean, I do agree that there's a fee war right now. I think Grayscale's at 1.5. Everybody else, I think, is under 1% at this point. But Michael, I appreciate your perspective, especially coming from the traditional world, and you obviously have been an investor for quite some time, so truly impressive track record. I would love to kind of get Patrick's take on some of those things that we just discussed. Patrick, you're on the other side of the spectrum. You're obviously very much involved in cryptocurrency space. We do shows on a weekly basis. What is your level of excitement around Bitcoin spot ETF, and what's your perspective on what Michael just shared with us?
The thing, in my regard, I'm more interested to know what happened to asset manager. Let's say you're an asset manager for a pension plan. I think the ETF of gold or any other ETF, it's supposed to make your life easier when you want to go to your brokerage account and then buy and sell and all of those things. But I'm curious to know a bit more about the process of that, like how much money you can deploy without asking permission to your superiors. All of those things is something that I'm curious about. Because I noticed that BlackRock and the other ETF sponsors are claiming that they're going to be deploying about more than $2 billion into the Bitcoin ETF in the first few days, just to initiate the demand. But I'm curious to know how long that's going to sustain, and what could we expect from pension plan and from other institutions.
Well, there's some sort of guideline. I mean, if you are a pension fund and you're managing asset, and including pension fund, government fund, doesn't matter what kind of fund. I mean, there's some guideline. You can't just shift a huge chunk of your portfolio from one day to the other. I mean, there's a board meeting. There's all kinds of consultation, and especially going into a new type of investment. For example, and the funny thing, talking about ETF, one of the things that asset managers tend to do at the end of every quarter, especially at the end of the year, at the end of their fiscal year, let's say December 31st it is, right? And they're a technology stock, technology ETF. So they own the Magnificent Seven, all that good stuff. And by the mid-December, they missed one. So there's one stock, I don't know, ABC Inc., a technology company out of the California or something that went up 250%. And that stuff does happen, right? So a very successful company, but that fund manager, that ETF sponsor did not hold that stock. He missed it. So it was not part of the portfolio for the whole year. So what's going to happen at the end of the year, or very close to it, is that they're going to buy it. Just so they show that they had it. So there's a lot of that stuff going on. It needs to look good. You look at analysts, same thing, right? They give you target on a specific stock like Apple. You'll see when, they're very conservative with their target, up or down. And the reason is simple, is because if they keep missing their target, they're not going to be an analyst anymore. So there's a lot of that game being played. So when it comes to this new ETF with Bitcoins, will there be some pension fund, that's going to decide to invest 1%, 0.5% of their asset into it? Maybe. But that's going to be difficult, I think. It's not, the floodgates are not going to open. Oh, finally we can buy a Bitcoin ETF that makes sense, and let's put 50% or 20%. you're not going to do this in any asset class. So I think people are going to be more cautious than any other type of asset, like biotech, for example, or precious metal, which by the way, precious metal is very, very small. I mean, I don't know of any large pension fund, that's buying GLD. I mean, it's very, if they're out there, it's a very small amount, very, a minority. But yeah, it takes a lot of discussion, conversation to move or shift asset from an existing pension fund into a new asset class. And that is a new asset class. So it's not going to be that easy.
Okay. That's interesting. In terms of the commission, BlackRock and all the other 11 competitors, they want to make money. They are not spending all the effort to make it approved, to just wait. They're going to have their army of salespeople trying to sell it to their investors and their LP and all that stuff. So there should be some buying volume. Like, is $2 billion from BlackRock in the first few days or week, is that under the realm of possibility?
Oh, it is possible, if not more. If you're BlackRock, you're managing already lots of asset, right? And a very teeny small percentage of all that will get you to your 2, 3, 4, 5 billion. I mean, I'm not concerned about that at all. It's the sustainability, right? Like how long, I mean, to flood, and that's what I said earlier. I mean, to flood a new ETF very quickly with new money is not uncommon. Is it sustainable? Again, the one that I was very much with all clients, when the marijuana frenzy came up, everybody was calling me, Michael, what do you think? Should we invest? Blah, blah, blah. And my recommendation was wait. There's no need to buy at the top, especially when it's a new ETF. But again, there's no 100% guarantee of all that, right? We're just looking back and saying, okay, let's look at all the new ETF coming out. How do they perform the first year? It's like IPOs, right? Same thing. I mean, a lot of those IPO tend to do poorly after the initial public offering. So there seems to be a trend. Now, is it 100% sure? No, of course not. There's nothing like that. But that's what history tells us. That's what the past tells us about a new ETF or a new fund like that. So yeah, Patrick, I wouldn't be surprised if they go. In fact, if they beat that target and lots of money come in, I mean, they have a lot of good salespeople on the road. They already manage a whole bunch of money. So, I mean, you look at an ETF or a fund company, they create an ETF to strictly invest in their own ETF. I don't know if you know what I'm saying here. So you get an ETF like BlackRock that has, let's say 10 ETF. So it's kind of not a problem, but it's, if you want to diversify and invest in the 10 different ETF, that's 10 different transactions, 10 different commission, and all that good stuff. So what BlackRock does is that it creates one ETF that's hold the 10 ETF. So now you only invest in one and you're diversified in those 10. That is a very popular thing among issuers. There's a lot of that. I know in Canada, Horizon is doing a great job at that. It makes it easier for people to diversify into different sector, but yet just holding one ETF, which is the mother of of the others kind of thing. So yeah, I wouldn't be surprised, Patrick, if those targets are like 2 billion being low.
Yeah. Okay, so that means that I think I've seen that historically speaking in terms of gold. When it was approved, the ETF, there was a bit of a dip, maybe 10%, but then it recovered, and then for the next decade, the price of gold kept growing and growing, and that was a lot. Part of that was the ETF itself, the demand for the ETF.
No, unfortunately, we can't attribute the rise of gold after the launch of GLD in 2004 to the ETF. Now, don't take me wrong. I mean, it came out at about $45 a share, and gold was $450 an ounce. So it's about 100,000 share for 10,000 ounce of gold, and that ratio has always been kept the same. But we can't now. The GLD, funny enough, at one point was the most popular and biggest ETF in the world. Okay, so it did get there for a few months, but that didn't last too long. But we cannot attribute it. It was an easy way to buy gold. Trust me. I mean, I was in that game at the time, and it was kind of fun. But we cannot attribute the following 7-8 years of the increase of gold, of the price of gold going up to GLD. To Spider Gold Share, we can't, unfortunately.
Okay, that's interesting. And in terms of the cannabis ETF, that one I'm not really aware too much. It's pretty recent. Was there a lot of competition between issuer, or it was just a single one? Or
No, there was a few. Obviously, that's what you tend to see. I mean, when there's a sector that's very popular, fairly new, exciting, it's buzzing, all that good stuff. I mean, uh, they all want to have one, right? They're after money. I mean, they want to manage as much money as possible. That's the key to making a lot of money in terms of fee and transaction fee and so on. So there was a few. Now it got more popular and more popular and more popular. There's, today I don't know. There's a whole bunch of them. They're pretty quiet. Sometimes, of course, there's a little bit of excitement because a new country would legalize marijuana, or a new province in Canada, or well, although Canada is all legal across the board, but in the U.S., that tend to happen. But yeah, there was a few, Patrick.
okay. And but compared to when it launched the ETF for cannabis, the price of that ETF has increased over time, or you saying it may have decreased?
It
People bought them?
decreased. Yeah, as more showed up on top, I mean, cannabis was a very exciting space.
Yeah.
Today, we've lost a lot of companies in that space, consolidation, of course, and some went bankrupt, and those things happen, which is normal business cycle. It's just, again, you need to pay attention to the excitement at the moment. When something like right now, Bitcoin is buzzing, right? Because of those ETFs coming out. And that's attracting a lot of attention. I mean, people are telling themselves, well, maybe I should buy, I should buy a little bit because everybody's talking about it. My brother-in-law's talking about it. The cab driver's talking about it. Everybody is telling me I should own Bitcoin, otherwise I'm going to miss the boat, that fear of missing out again and all that good stuff. So it will create excitement, but it's very difficult to keep the excitement level, all the time. The adrenaline, it's difficult for any sector. And, it's like the Magnificent Seven. I mean, already I think you're seeing some people disenchanted a little bit, the first few days of trading has taken money away from the Magnificent Seven to go other places. And so could the bubble be deflating? I think it is, to be honest with you, which is about time because that space is way, way overvalued. It doesn't even make sense. I mean, you look at a company like Apple, trading at 32, 34 PE. I mean, I bought Apple in the past several times below 10, and I will do it again when it gets down below 10, and it will get down below 10. So it's just a normal cycle. I mean, we're talking about, history repeating itself. It is in the process of doing the same thing it did in 2007, in 1999, 2000, and 56, in 29. Same thing. It's the same process over and over again. So we have to be careful. I mean, of course, sometimes, is it lot? I don't know. I mean, if you buy undervalued asset and you sell them when they're overvalued, you're always going to make money. Now, it might take a month, it might take a year, it might take 2 years before those assets that you bought undervalued become overvalued. That we don't know. I mean, I believe right now we're in a bear market, but I'm 1 out of 100 that believes that. So I stay quiet in my corner and let history repeats itself nice and slowly. I think, excuse me, I think it'll be the longest bear market in your lifetime, your father and your grandfather's time. It'll be the longest bear market you'll ever experience. But we have to let it play out. We have to be careful when we buy something. Doesn't matter what it is, valuation is critical. If you ask people today, I mean, how much money, Apple is making, what's their PE, they don't care. They just don't know what it is. And, Apple's exciting. I have an iPhone, I have an iPad, so let's buy Apple, because it's going up. So you have to be careful about excitement surrounding a new launch or a new product or a new sector, a new space where everybody's talking about it. And, usually it's really difficult, like I said, to keep that excitement going up for several months, for several years, right? It's very difficult.
Okay. Have you ever seen a recession or economic downturn on the year of the U.S. election? Like for countries that are either the U.S. or really attached to the U.S.?
Yeah, we'd like to think that because there's an election, the government or the people in charge of the election or whatnot are able or capable of controlling, the world economy. Unfortunately, doesn't quite work that way. Over the last few days, I've seen a lot of article about, the first few trading day of the year will tell you what the rest of the year will be. It's a mantra that's been repeated every January, but it doesn't work. I think the ratio is like 50-50 or 60-40 or something. Who wants to invest with those kind of odds? Like, I'm not a gambler, right? Like, well, I do. I play a little bit of poker and stuff, and I guess that's where I let some steam off. But when it comes to investing, I mean, every dollar counts. I'm not going into a trade just because I feel like I should do a trade today. Like, people will say, well, men eat red meat, so they need to trade every day. No, we don't. And I think that's a very dangerous kind of thing, and it is gambling. So I go into a trade because, it's undervalued. Otherwise, I won't touch it. Like if you ask me today, would I buy Apple or Microsoft or no, I won't, because it's overvalued by any matrix. Now, of course, the talking heads on CNBC will tell you differently, and they're running ads for those companies or those ETFs and stuff like this. Of course, they're not going to talk, bad. They don't want to lose advertisers and stuff like that. That old dynamic is a different topic, but it's there. It exists, right? So, this election, seasonability exists. I mean, you can track that, hundreds of years. The presidential cycle, the election cycle in the U.S. is a big one, but it is not a way to gamble or to invest, because your odds are not, why would you invest in something with a 50% odds? That's a very dangerous proposition. It's like poker or bridge. If you're familiar with bridge, I mean, you play with odds all the time, right? Like, if I had, my cards are showing me, if I go all in or I bet or something, my odds are 90% chance of winning, I will take that bet, Now, will the 10% come up once in a while? Of course. Yeah, you're going to lose, pocket ace is going to lose against pocket king, but your odds starting are better than the pocket kings, right? So you play those odds, but not the 50-50 or the 60-40 or, that sort of thing. I mean, I always try to figure out, how close can I get to 100%, which you can never, but, the 95, the 92, the 90%, I mean, those I will play. I will invest based on those odds, but not 40-60 or 50-50. I'm just going to pass.
Michael, I want to go back to something that you mentioned earlier about how whenever there's a lot of buzz, whenever there's a lot of conversation around something, that tends to be overvalued. I want to play a little bit of devil's advocate here, but do you think in the case of Bitcoin that the buzz is only on the institutional side and the retail hasn't really gotten in yet? I think I have seen some on-chain data around to make that case that we haven't really seen the retail jump into the industry yet. Now, they were in it back in 2021, and that was very euphoric. Super Bowl commercials, everything. Everybody feels like we made it, and that should have been a sign for us that, okay, this is the top. Now, to spark that bull cycle, specifically around the crypto, I believe it was MicroStrategy buying Bitcoin, and that trickled into the retail side. Do you feel like maybe the same thing can happen in this particular case? And I know that when you look at history, you look at years and years of history, and unfortunately, we don't have that here in Bitcoin, right? Mm. So maybe this is more of a question for Patrick. I mean, do you think that we're not necessarily seeing that type of buzz that we are accustomed to seeing when retail is in the industry?
Yeah, I think we're much closer to the bottom of the bear market than the top of the bull market right now. Like we were kind of in between, where we're pretty close to 67, like of the last bull run, but like definitely, if I look at just the crowd around me, there was a lot more excitement from retail individuals back in 2021 and 2017 than it is now. So we're really not there yet. And I've seen the similar statistics. A lot of the price more recently have been pushed by much larger whales and institutions on the CME, much more than the traditional exchange. So definitely we're not at the peak.
Yeah, and I think that also contributes to the lack of volatility. I mean, I think 2023 was the least volatile year in Bitcoin's history since, 2016. I think that was the other case for why there's a strong belief that there's a lot of institutions in the industry and not so much retail just yet. And Michael, I know you don't dabble in Bitcoin, and this may be over your head, or maybe it isn't, but I'm curious to kind of get your perspective on this specific take.
Well, if you ask most, I'm going to call them traditional investor, but away from cryptocurrency, if you ask most investors, do they remember the bear market of 2000, 2002? You know, they'll say, no, it's 20 years ago. You know, and a lot of those young investors, the Robin Hood kind of crowd, don't even remember 2007, 2008. You know, they're too young. I think the issue right now with Bitcoin or crypto is that everybody remembers, you know, a few years ago what happened when it went, you know, above 60,000. Everybody knows someone that bought at 50, 55, you know, and that sort of thing, right? It's fresh in their memory. So I agree with Patrick. I think if there is going to be an upside, you know, and an exciting one, let's put it this way, I don't think it's going to be now, because you have too many people on the retail side. And they're the one that can move the markets, by the way. It's not BlackRock, you know, putting $2 billion into something. I mean, that it's not the institutional side, it's the retail side. And that retail side is important. And the retail side do remember what happened, you know, a couple of years ago. And they might have cold feet, you know, or they might wait, or they might want to see, which is not the right way to invest, but, you know, for a breakout, you know, above 100,000 or something. I always find that funny that, you know, people wait for breakouts. And so, yeah, I think it's too fresh in most people' memories, you know, what happened to Bitcoin. And I can say recently, not 20 years ago, like, you know, the .com bubble and that sort of thing. People forget about bubble if they're too far away. They don't pay attention, again, to history. They don't care about history. They're not trying to see some familiar, you know, move, or they're not concerned about that. It's about, again, the fear of missing out and how can I get in. And I agree with Patrick 100% on that one, is that if we are, we're more likely, if you want the retail, you know, to jump in, I'm not saying they will, but if you want that crowd to drive the price up, it's going to take a few years before they forget just what happened a couple of years ago, right? It's fresh in their memory. I've met a lot of people. I mean, this summer on vacation, you know, I love to talk to people. And what's your experience with cryptocurrency? I mean, to be honest with you, it was not a very positive discussion with a lot of people. You know, they were pissed off. They did not like the experience at all. That's going to take a little bit, you know, a while before they forget that one.
Yeah, it's going to take some time. I mean, user experience is a very hot topic right now in the industry, whether it be in gaming or other verticals, but it is something that I think a lot of folks are working on, and eventually, you know, that will improve. But specifically around Bitcoin, I mean, especially when it comes to self-custody, a lot of people don't want to take on that risk either. You know, you hold on to your own crypto and you lose it, and then, you know, what do you do there? Now, there are some cold storage wallets, and they're providing recovery services, you know, which is debatable. People that are in the industry and have been for a long time, they don't want that type of centralization. So you're always going to have people with different opinions, but I mean, there's definitely pros and cons to both sides. Patrick, is there anything else that you can think of that we would like to pick Michael's brain on in terms of, based on history and past events around ETFs and how that could potentially impact the Bitcoin ETF?
Yeah. But I think for me, I like to, you know, like there's laws of supply and demand. This is what move prices. The supply of gold versus the supply of Bitcoin, there's some different structure there. The demand is a lot harder to assess, but the supply is much easier because it's more mathematics. So gold, I've seen that over the last century, production of gold is about 1.8% of the total supply. Correct me if I'm wrong with that, but apparently that has dipped a little bit more recently. But if you take a long few decades ahead, that 1.8%, should it remain about the same in terms of mining and production of new gold supply?
Yeah, I don't think that that number needs to change dramatically for the price of gold to go up. I mean, I think we just need to look back the last 20 years, right? I mean, in 2000, you were able to buy an ounce of gold for $250, right? $300 US. And yet production kind of remained the same. There's what, about 190,000 metric ton of gold that's ever been minted. That's 450 million pound in terms of if we wanted to put it in pound. And there's about 55, maybe 60,000 metric ton that has like proven reserve, like miners have the gold in the ground and it's proven. So there's plenty of room. And again, gold is not just, you know, jewelry, although it's about 45 almost 50% of the gold production goes toward jewelry. Central banks around the world, except Canada, which is kind of sad, but they own about 20%, and that's been on the increase. I mean, the last few years, you've seen major central bank increasing their gold reserve dramatically. I mean, Russia is one of those, China, Italy, France. If you look at Germany, same thing. So, that 1.5, 2%, Patrick, can stay the same, and we're going to be heading towards higher gold price. Not on the short term, but long term. I mean, 10 years from now, I wouldn't be surprised to see gold at $8,000-$10,000 an ounce.
Yeah.
Just simple economics at one point.
Yeah, but if you take out the demand part of this equation, just looking at the supply, that's what I find interesting in regards to Bitcoin. Because right now, in the last 4 years of this cycle, the production of Bitcoin was about this 1.8% of the total supply. But coming around April, when the halving occur, this will shrink by half. So, and then 4 years later, again, it will shrink by half again. So the supply of Bitcoin will no longer be relatively equivalent to the supply of or new production of gold. Now, after that, then you have to factor in the demand. But on the supply side, that's kind of a key difference there that I find kind of interesting in that regard. And I think that before this last 4 years, the production of Bitcoin was like twice that of gold. And that's why, like, for me, whenever people were comparing Bitcoin to the new digital gold, I never really liked that, because when you look what Bitcoin was correlated to was high risk asset like the S&P, but gold was more of a refuge asset. So when there's economic downturn or uncertainty, that's when you tend to go to gold as a refuge. Bitcoin was the entire opposite. And since the last year with the banking collapse in the US and a little bit abroad, then people started to realize that maybe Bitcoin was a kind of a refuge in that regard. So you saw the price of Bitcoin increasing with the collapse of banking. And then after that, it's the ETF started to be discussed. And right now it's a lot more correlated to gold when you look at the correlation chart. And I think over the years it has peaked and gone down and peaked and gone down. So, but right now it's been for the past several months a lot more correlated to gold. So it remains to be seen if that's going to hold true or not with the ETF.
Yeah.
So it's another interesting.
It's a short period to look at. You're right. But again, about Bitcoin, there's some hardcore believer out there, just like gold bugs, right? There's some gold bugs that are, and I'm one of those. I mean, but again, I don't fall in love with any specific asset or securities, but I don't think I think everybody would agree that you can't replace gold, right? From that standpoint. I mean, we go back 5,000 years. Nobody has ever come up with, I don't know, another metal or something, say, oh, the hell with gold, right? Gold is no good anymore. We'll replace it with something else. I don't know. And I think from a Bitcoin standpoint, I mean, I don't know, I'm not an expert in the space, but there's thousands of token right now, or, hundreds at least, right? Like there's a lot of them. One concern should be that one guy one day comes up and say, Bitcoin, no good anymore. This one's better. So there's that possibility. Will it? I don't know. Will it happen? I don't know. Am I hoping? No, it has nothing to do with that, right? But if there is a possibility, then there's a risk. And you were talking, Michel, about where do you put your Bitcoin, right? Well, that same issue with gold has been around for thousands of years. Where do you put your gold, right? I mean, we have that issue today. I mean, I think anybody would recommend to have a small percentage of physical gold. Where do you put that physical gold? Do you put it with something like Kitco in Montreal? Is that safe? How do you get access to it if you want it now? It's Sunday, 10 p.m. Where do you go? That sort of thing. So that debate about the safety of owning physical gold and where to put it and all that good stuff, I mean, it's been around a long, long time. And and I think with Bitcoin and other type of crypto, those same challenges are very real. Those same questions are the same. It's kind of funny to see that. But yeah, I think that would be a concern to me. Now, I'm not a technical expert, like a computer guy. I'm not at all. So to me, it could be a possibility. Then there's a smarter guy that comes up one day and say, which you can't do with gold, but you could probably do with Bitcoin. I mean, maybe this government likes it better than the other or whatnot. I mean, maybe like Ethereum, right? And Bitcoin, there's that competition kind of thing. It seems one's better than the other. Some love this one more than the other, and that could there be a third one that dethrones those two, or I don't know. That would be a concern to me.
I think for me, the thing when we talk about the demand, when you look at gold in terms of electronics, it's I think a growing sector, but gold is an atom. You cannot just duplicate or create it in a lab like a lab grown diamond, because the atom itself is what makes gold, and you cannot duplicate that. There's no such thing as alchemy that you can produce gold out of nowhere. As opposed to Bitcoin, you can just copy the code base, and in 30 minutes it's basically launched. So that part of the kind of the demand, it's you cannot really duplicate gold, and if there's a demand for electronic, that will last for as long as you need it. As opposed to Bitcoin, you could produce a different version or the exact same and launch it, and the only thing that protects it is the branding and the network effect. So, and that could be overcome if enough people go beyond something new, and that's what basically is happening with Ethereum. Every bull run, the market cap of Ethereum keep getting back a lot of ground in terms of, like, if you compare them, Ethereum keep growing a bit faster than Bitcoin every 4-year cycle. And the thing, to me, there's more utility to Ethereum because it's a decentralized operating system versus Bitcoin that is just kind of a somewhat of a long-term store of value, but it's not even good as a store of value short-term because of the massive fluctuation. So, but even with that said, some country, the government-backed currency fluctuates so much that Bitcoin is a better choice. And if those countries, the people cannot get their hands on US currency, then Bitcoin is one that you can carry on your phone or in your head, basically. So definitely there's utility there that we don't experience in industrialized country like Canada and the US and stuff, but it's still there for some part of the world.
Yeah.
Michael, you said that there are a lot of ETFs out there, and you specifically mentioned marijuana ETFs. Are there any successful marijuana ETFs? Or I guess the larger question here is, are there ETFs that have completely failed in terms of an industry?
Well, it's not uncommon for an issuer to just shut down an ETF. I mean, it happens. It gets so competitive. There's 50 of them covering the same space. At one point, the last 4 or 5 are just going to die. It's not worth it anymore. Other kind of thing, I mean, if you think of an ETF like RSX, right? Russia, equity. Well, that kind of died when Russia invaded Ukraine. Everything stopped. There was a lot of sanction, and this U.S. issuer had a very successful ETF out of Russia covering, Russian company in rubles and all that good stuff. And they had to delist. They had to shut down. Now, they've return of capital to investor because they had some cash, in the account and whatnot. But a lot of their assets are still in Russia right now in rubles, and there's nothing they can do. So there's different reason why an issuer would just shut down an ETF, but it does happen frequently. I mean, especially the small marginal firm, it's not uncommon. Let's put it this way. Specifically to your question about marijuana, I haven't looked at them, to be honest, specifically for a while. There's up and down, that sort of thing, but from a trend standpoint, it has not been positive. Let's put it this way.
What about ETFs? Go ahead, Patrick.
Oh yeah, sorry. In terms of a ETF issuer, let's say that in the case of Bitcoin or whether it's gold, before you get the approval of the ETF itself, let's say that you're BlackRock, would you try to load up some of the asset so that you have a buffer of them when your customer come and you sell it to them, that you don't go directly to the market at a bad price? Would you try to load up beforehand, before the ETF is even approved, or you would never do something?
You have to. It's called a seed capital, right? And typically you could have 4 or 5 guys, friends, put their own capital and buy the security that will be in the ETF. But yeah, there needs to be the asset that the ETF is going to hold, in the ETF before you even start. You don't just go to the market and start buying. Let's say if you got an ETF of Apple, you don't start the ETF, start taking money and go buy Apple.
Right.
There's a bunch of share of Apple already in the ETF, and that's been funded. We call it the seed capital kind of thing by the issuer. It could be, in some case, a bunch of friends together putting the money themselves, that sort of thing, and they get their money back, and they get a premium, that sort of thing, which is very typical, business practice. Yeah.
Would you try to have a buffer that for several months or just a few days for the initial kind of demand? Because if you're trying to get a good price on your Bitcoin, maybe if they loaded up for the past 6 months already, maybe they could cover the next 6 months or of demand, or maybe the next 3 months. I'm kind of curious how much of that is priced in already then.
They do. I mean, obviously they've been securing Bitcoin. Now, how do they do that? I mean, maybe buying them outright, holding them, having them in trust while the process is moving forward. And they could go out to a third party to secure additional Bitcoin in case it takes off, and things are going well and that sort of thing. And now they would be paying a fee, a premium, whatever, for that privilege, that right of having access to those Bitcoin or whatever security would be in that specific ETF. But yeah, those kind of things are taught ahead of time and kind of prepared. They're prepared for any eventuality, and that would be disclosed in their filing with the SEC, which is quite a big document. I mean, it's not easy, it's not cheap to start an ETF. And that's where you tend to see today larger issuer, not necessarily like BlackRock being the biggest one, but even you don't have like a guy one day deciding let's start an ETF. I mean, it does happen, don't take me wrong, but it's rare, right? Because it does cost money, it takes time. From a legal standpoint, the fighting with the SEC is quite demanding, It's a lot worse than a private company, taking it public kind of thing. So I say worse, maybe that's the wrong word, but a lot more demanding. Let's put it this way.
Let me share my screen for a second just to show you what happened yesterday with the fake news of the approval.
Yeah.
Yeah, you see that green candle here?
Yes.
So when you measure it, this is just basically 3,000 Bitcoin. So like about $140 million of volume. And it pushed the price almost $2,000. So if you really have $2 billion that is lined up to like when they get approved, there could be a pretty massive candle. But if they already have a buffer of Bitcoin, maybe out of the 2 billion, there would be a much smaller amount that is used to buy from the market, so they may wait for the price to go down first, you would think?
They could. I mean, I haven't read any of their filing, to be honest. I don't know what's their approach from a buying standpoint, or selling for this matter, or with exchange they're going to be using and how they're going to be using it and that sort of thing. Obviously, the spread, I think, in Bitcoin is quite large. It's not a penny like you would see for a stock on the stock exchange, So I'm not familiar on how they're going to do it, but they're prepared for it. Now, you might see, again, some excitement, or you might not, and the price is going to go down instead of up, or up instead of, we just don't know. I mean, it was interesting to see what happened with that tweet, or that X. I don't know, I think we're going to say X now, but it was quite, I don't know, like, my question is, who's going to investigate the SEC? Because if you're a public company, you do something like this, I mean, they're calling. They're calling your counsel, they're calling the legal office, what the hell happened, right? So I'm wondering who's going to be investigating the SEC for something like that, because that's highly unusual. I mean, that's kind of crazy what happened there. If someone did it just to take advantage of a quick move, and it's very possible, it's quite amazing, that using a phone from the SEC, yeah, it's exciting.
I think for me, it's just 140 million moving the price $2,000. What happened if you put 2 billion is the price could really go to 200K like in one day.
I don't think, Patrick, I don't think you would drop that much in one shot. I mean, what you saw yesterday was panic, right? Or excitement, either one of the two, right? For the price to go up like this, goes back down. So that was a very uncontrolled situation, and those things happen. I mean, in precious metal, same thing. I mean, and it's funny we talk about huge move like this. Like I said, I've been in precious metal space for over 30 years, and every time the price of gold goes down dramatically, a lot of people manipulation. Like it's a scamming. Like they're doing bad thing to the price of gold. manipulating it and stuff like that. But every time the gold goes up, dramatically, and it does, as much as it goes down, right? Nobody talks about manipulation. It's totally normal. It's normal for gold to go up $50, in one day. But if it goes down $50 in one day, it's the end of the world. They blame Russia, they blame the central bank, there's conspiracy, and what's going on. But I think a little bit of the same thing is going to happen with Bitcoin, because if there is that kind of big move, people are going to blame the SEC. They're going to blame, they're going to try to find a scapegoat, right, to explain those moves, when sometimes they're just totally normal.
Yeah, there was some conversation around if you could possibly sue the SEC for all the liquidations that occurred yesterday. So I'd be interested to see if anybody has any success with that.
Well, if there's money to be made from a legal standpoint, if you're an attorney, they will try.
Yeah,
it's their job. Especially in the U.S., right?
Definitely. Well, this was a refreshing conversation. I come on here and I talk to Patrick quite a bit. We share a lot of similar perspectives, but it's always nice to get a different perspective. So, Michael, I appreciate you coming on. And although you're not into Bitcoin, I certainly value your opinion as well. Coming from the traditional world as an investor, really respect what you do. So thank you so much for sharing your thoughts, and would love to have you back on.
My pleasure, Michel. Thank you, Patrick. Thank you very much.
All right.
Pleasure.